Are you looking to purchase a home with only 3.5% down and your credit score is low as 580? Then you want to watch this video. Hi, my name is Khalil and I'm a licensed realtor in the state of North Carolina in the greater Piedmont Triad area. If you're not familiar with those areas, you have Greensboro, Winston-Salem, High Point, any one of those marketing areas, but I stretch out all over North Carolina. I do deals everywhere. Before I get into some educational factors about this video, I want to take the time and I want to re-invite you back into the channel, and feel free to like and subscribe. Stay alert to any information that comes from me. I'll be giving you a lot of good game this year in 2026, and I'm just looking forward to just hearing back some of you guys' feedback or any questions that you may have. So, some of the big determining factors with your FHA loan is your debt to income ratio. Okay, what are some of the debts that they take a look at? They'll look at your car loans, they'll look at credit cards, they'll look at some of your personal loans if you have any, child support and alimony, that counts as well. Any debt that has about 10 plus payments, they're going to take a look at it. So they're taking a look at your income. They're going to look at the salary, hourly, overtime. If your overtime is very consistent, self-employment, 1099s, or anything that has inconsistent payment ranges or amounts or things of that nature, they're going to have a little tougher time when qualifying for your debt to income, but we'll take a look at all of them. So let's take a look at some of the determining factors when they're looking at your FHA loan requirements. Okay. Now I must say, if you make 50,000, 75,000, or even 100,000, listen, your loan can still be approved. Okay. This loan just doesn't work for first-time buyers, second-time buyers, even investors. It just depends on how you go about certain things, but you can use this loan at any time of the year. You can only have one at a time though. So let's take a look at how the loan officer will determine some of those income factors. So let's just say you make roughly around $72,000 a year. When you divide $72,000 in salary pay and you divide that by 12 months of the year, that gives you about $6,000 a month in gross income. So yes, the FHA loan requirements, they will look at your gross income, not your net income. So you'll take that $6,000. So let's put that there. Let's keep that to the side. All right, so now let's look at some of your household debts, right? The car payment, the student loans and things of that nature. Let's just say you have a car payment around $450, student loans around $300, credit cards average around somewhere around $150. And when you're taking in a factor of determining your DTI, we're also going to look at the PITI, which is your future house payment, and the mortgage insurance that's included in that. So let's just say in today's market, your mortgage payment is around $1,850. That puts you at a total of $2,750 for your total debts. So now you're going to take the $2,750 and you're going to divide that by the $6,000 a month. That's going to put you at 45.8%. That is too high to qualify for an FHA loan. Your debt to income ratio needs to be at 43% max. Okay, and there's a lot of things that can determine that. Okay, now I must be the first to tell you, it doesn't matter if you have a 700 credit score, you can still be denied. So the biggest thing here is your debt to income ratio. Now, you can make payments off on debts to kind of help push this loan through. Okay, so make sure you speak with a qualified professional, or make sure you speak with a mortgage loan officer that can help you understand every single dynamic of your income and your debt to put you in the right position to push that through. Now, so let me tell you some facts about this FHA loan as well. So again, it doesn't matter if you have a 580 or a 700 in credit score, your down payment is still 3.5%. Now, I'll tell you this as well. If your credit score is anywhere between 500 to about 579, you may be eligible for at least 10% put down, but that will be under the lender's discretion. So please make sure that you chat with them about that as well. For your employment history, 2 years of work history is really all they require. Okay, and it doesn't matter if you have different employments. It doesn't matter if they're not in the same line of work. They really want to focus on consistent income for at least 2 years. Okay, yes, you have to be a U.S. resident. And I will also tell you this, your down payment can be gifted. Now, what exactly does gifted mean? Gifted means that it can be given to you. It can be given by a family member. It can be given through your job. So it can even be approved through a nonprofit. So more like your down payment assistance programs. Yes, they will help you put down payment on your FHA loans. Now, that is also determined by which county you're also lived in. So for an example, I know in Guilford County, you're looking at about 15,000. In some other surrounding counties, they have about 10,000 that they will put down towards that. So that's some good gifting right there. When you say I would say that's a pretty good gift there. Okay, your FHA loan can be approved through a single family house. It can be approved for a condo. It can even be approved for 2 to 4 units. So anybody who's looking to buy a dwelling that's less than 4 units, a quadplex, duplex, triplex, things of those natures, yes, you can get an FHA loan on that, and it's only going to cost you 3.5% down. Yes, FHA loans are assumable, and you can refinance those loans as well. Most of the time, there's less documentation involved, and sometimes no appraisal. It just really depends. I must tell you that you must make at least 6 payments before you refinance that loan. Now, some common myths that I hear about the FHA loan is it's only for first-time home buyers. That's not true. That it also takes forever to close. That's not true as well. And your home must be in perfect condition. That's not true as well. A few things that the FHA loan will not push through or deny the home, it will be any paint chippings, it'll be any exposed wiring, it'll typically any roof issues. If the roof has about 2 to 3 years left on its life span, you have broken windows, you have trip hazards in the concrete, missing stairwells, any foundational cracks with movement, staggering floors, and any type of water intrusion. That's right, you cannot have any active leaks when they come out and take a look at it. So if you're looking to do a fixer-upper, a FHA may not approve of that. There are a few homes that a FHA will stay away from. Most of the time, the fixer-uppers, you have a FHA 203K loan, and that's a redevelopment loan, and I'll do a separate video on that. FHA stays away from any log homes or any converted homes as well. There are a few things as well that can hurt you. You have Chapter 7 and Chapter 13. If you guys are not familiar with what those things are, Chapter 7 is bankruptcy. So if you want to qualify for an FHA loan and you face some type of bankruptcy, you have to wait at least 2 years. For Chapter 13, which is more reorganized bankruptcy, the court you have to provide at least 12 months of on time court approved payments. So the biggest thing here is, let me tell you, if this is your year to buy a home and you have an FHA loan, listen, it is possible and you can do it, okay? If you have any questions about the FHA loan, please leave any questions or comments below. I'd be more than happy to be able to explain those things to you. And if you're interested in knowing a little bit more about how it may work in your favor, listen, just book a phone call with me and I'll be more than happy to get on the phone and just chat, and we could just go from there. So if you found interest in this video and it did you some justice, hey, listen, please like and subscribe. Thank you. Talk to you soon.